Welcome to Big Picture Earnings Analysis. Today we are looking at MongoDB, ticker MDB. After the bell, the stock jumped over 15%, and our mission is to unpack why. It was a massive beat on their fiscal Q3 earnings.
A massive beat is almost an understatement. This was one of those reports that just signals a fundamental shift in the business. We're talking about a company that is clearly moving from just pure growth to, profitable, large-scale execution. And the market loves that right now.
Absolutely. So just as a quick refresher, MongoDB provides that flexible, document-based database software. It's really designed for modern, unstructured data, which, is basically the foundation for almost every new application being built today.
Right.
So let's dive into the numbers for the quarter that ended back in October.
We have to start with the bottom line. The profitability was just astonishing. MongoDB reported an adjusted earnings per share, or EPS, of $1.32.
Okay, let's put that in context for you. Analysts were forecasting somewhere between 80 and 81 cents.
Right.
So they came in almost 60% higher than the street's highest expectations. And that's a 14% increase from last year, so the trend is heading in the right direction.
And that incredible EPS figure almost overshadowed the top line, which was itself really impressive. Total revenue was $628.3 million. That's up 19% year over year. And it easily cleared the consensus, which was, somewhere around $592 to $594 million.
But here's the metric that I think really tells the story of this transition. It's the shift to actual net income. If you look back just 1 year ago, the company had a non-GAAP net loss of $98 million, a loss of $1.16 per share.
And now, for this quarter we're analyzing, a non-GAAP net income of $114.5 million. Just think about that swing for a second. From a nearly $100 million loss to a $100 million plus profit in 12 months. That does not happen by accident.
No, that's a huge demonstration of operational leverage. So what's behind that? Is it just more customers, or did they fundamentally change how the business runs?
It's a combination, but the efficiency part is key here. The CEO, CJ Desai, he pointed this out himself. He said they delivered meaningful margin outperformance. That tells you it's disciplined cost management combined with the natural efficiency you get from scaling a cloud platform like Atlas. They're getting more and more revenue for every dollar they spend.
Okay, so let's talk about that engine. Atlas, their fully managed cloud database offering. That's really the core of the story, isn't it?
It's absolutely the story. And here's the kicker. Not only is it their flagship product, but its growth actually accelerated. It hit 30% growth year over year.
Wow.
And what makes that number so powerful is that Atlas is now 75% of MongoDB's total revenue.
Right. So when 3/4 of your business is accelerating, that's a very, very strong signal.
It's the ultimate validation of your product market fit.
So who's buying it? Where's all this new demand coming from?
Well, they're still adding customers at a really healthy clip. They added 2,600 new customers in the quarter, bringing the total to over 62,500. But, it's the quality of those customers that really matters for the long term.
I mean the big spenders,
Yeah.
the ones who are really committed to the platform.
Exactly. The number of customers spending over $100,000 in annualized recurring revenue, that number reached 2,694. That large enterprise segment is just crucial for stable, predictable growth.
And the CEO gave some color on that. It wasn't just coming from one place, right? It was pretty broad-based.
Yeah, totally broad-based. He specifically mentions strength across the Americas, and importantly, also in Europe, the Middle East, and Africa, so EMA. That geographic diversity is really important.
And what about the smaller guys, the developers?
He mentioned them too. The self-service business is still booming. The digital natives, the AI natives, the individual developers, that bottom-up adoption model is still a massive growth funnel for them.
Okay, so strong revenue, incredible profitability. Let's talk about cash flow. This is often the truest sign of a company's financial health.
And this number might be the most impressive one of all. It's the one that analysts really keyed in on. Free cash flow was $140.1 million in the third quarter.
Okay, 140. And what was it last year?
Last year in the same quarter, it was $34.6 million.
That's a 4-fold increase year over year. For you listening, that just means the company is an absolute cash machine right now.
It is. It shows incredible efficiency. And having that kind of cash gives you so much strategic flexibility. You can reinvest in R&D, you can make acquisitions. It's a great position to be in.
Absolutely. And that strong position is why they felt confident enough to raise their forward guidance so aggressively. This is really why the stock popped.
That's right. Management is basically saying this performance isn't a fluke, it's the new baseline. So for Q4, the quarter we're in now, they're guiding for revenue between $665 and $670 million.
And the midpoint of that is what, 667.5 million? That's way above where analysts were, which was closer to 626 million.
Way above. It shows the momentum from Q3 is not just continuing, it might even be getting stronger.
And what about for the full fiscal year?
They moved the goalpost significantly. The new revenue guidance is for roughly $2.434 to $2.439 billion.
And their old guidance was?
Their old guidance topped out at $2.36 billion, and Wall Street was basically hoping they would just hit the top end of that old range.
So they blew past the old guidance entirely and set a much higher bar.
A much higher bar, and they're locking in the profitability too. The full-year EPS is now expected to be between $4.76 and $4.80. This just proves the business model works at scale.
And we have to remember, all of this is happening right as a new CEO takes over.
That's right. CJ Desai officially succeeded Dev Ittycheria in November. Ittycheria was there for 11 years, took them from startup to where they are now. Huge shoes to fill.
So what does Desai's background tell us? He was at Cloudflare and ServiceNow before this.
It signals a focus on operational excellence and enterprise scale. Those are two giants in cloud infrastructure. His expertise is in taking a high-growth company and making it a standardized, efficient enterprise selling machine. It aligns perfectly with what they need to do next.
Which brings us to the future. And the future of data is, of course, all about AI.
It is. And MongoDB is positioning itself to be indispensable there. They were just named a leader, again, by Gartner in cloud databases.
And they also got that big partnership with Microsoft.
The Microsoft Partner of the Year award, yeah. That's a huge stamp of approval, especially for running AI applications on Azure.
But the really interesting strategic move is around their product features, right? Specifically, search and vector search.
This is the key point. This is where it gets a little technical, but it's so important.
Okay, break it down for us. What is vector search, and why does every AI company suddenly need it?
Think of it like this. A normal database search looks for exact words. You search blue shirt, you get blue shirt. But AI needs to understand meaning or context. Vector search turns data, text, images, whatever, into numerical representations called vectors.
So if I search for sky-colored top, the database knows that's conceptually very close to blue shirt, even if the words don't match.
Exactly. It's the technology that powers all modern AI applications, from chatbots to recommendation engines. It's absolutely essential.
Okay, so this critical cutting-edge AI feature was previously only available on Atlas, their cloud product, the product that makes up 75% of their revenue.
Correct. It was a premium feature for their premium product.
But now they're making it available in preview for their self-managed on-premises versions too, the free community edition and the enterprise server.
Right. And that's a massive strategic pivot.
Wait, hold on a second. If Atlas is where you make all your money, why would you take your crown jewel AI feature and start giving it away for free to people who aren't on your cloud platform?
That is the multi-billion-dollar question, isn't it?
It sounds like you're risking cannibalizing your main business.
You are. But what it signals is that they understand how intense the competition is. A lot of big companies, for security or compliance reasons, still keep their data on premises.
So if those companies want to build AI and MongoDB doesn't give them the tools to do it locally, they'll just go to a competitor who will.
Precisely. This is a move to make sure MongoDB is the data layer for AI, period. Regardless of whether it's in the cloud or on your own servers, they're choosing platform ubiquity over short-term cloud lock-in.
It's a bold bet.
It's a very bold bet on the future of the market.
So just to sum it all up for you, MongoDB delivered an incredible quarter. The growth in their Atlas cloud platform is accelerating. They've made a decisive shift to profitability. Cash flow is exploding, and they've raised their guidance for the future significantly.
The business fundamentals are incredibly strong. But this leads us right back to that final provocative thought. If your whole strategy is to be the data platform for the AI revolution, and 75% of your money comes from your cloud product, what does it mean when you give away your key AI technology for free to on-premises users?
Is it a defensive move against the giant cloud providers like Amazon and Google? Or does it signal that the future of data isn't pure cloud, but truly hybrid, and that winning the AI race means you have to be everywhere, even if it hurts your main revenue stream in the short term? That is the strategic choice that's going to define MongoDB's next decade.